So when it comes to inward conversations, we usually want to help investors understand what it is the life they want and use that to help see the risks and the returns that they're looking for those life that they want to have.
Welcome to the American Dream Builder and Investor Podcast, where our vision is to inspire busy professionals, especially first and second generation immigrants and Americans, to explore the state of the American dream in 2022 and beyond. That is, the trinity of freedom: time, geography, and financial freedom.
Welcome to episode 6, where we'll talk about insights that will help you understand what kind of investors you might be. I actually thought about talking about another topic, like the different types of investment approaches in real estate as a passive investor first, and then it dawned on me that I never really talk about that first when I speak to my customers in our exploratory calls. Because like many other conversations, we always want to start the conversation inward first. What does that mean? So when it comes to inward conversations, we usually want to help investors understand what it is the life they want and use that to help see the risks and the returns that they're looking for those life that they want to have. Yes, it's nice to have lotteries, but the risk of me losing the money to win the lottery is just too high. Yes, while it is nice to win the lotteries, the likelihood of me losing the money in order to win the lottery is very high. So balancing of the risk versus return is an important factor when it comes to understand what type of investors you are. But before we even get to the topic, in the previous episode, we talked about understanding the life you're trying to create from a personal, mental health, and financial standpoint. That is such an important starting point. Even if you do have your own financial advisor, it is important to understand your finances, at least at a high level, so you have control on something that is impacting all parts of your life. Obviously, I'm not a financial advisor, but I'm speaking from experiences of talking to hundreds of new and experienced investors. There is about 3 types of investors that I have usually worked with. For example, the first type is, let's just call him Sanjay. He's had a successful supply chain IT career for more than 2 decades, has a wonderful family with 2 adult children, and he wants to take early retirement with his wife in the next 2-3 years. And for Sanjay, early retirement doesn't consist of managing tenants and toilets, but do consist of traveling abroad to see family and friends, treasure those important connections and memories, visiting new countries, drinking wine, maybe some hobby consulting with all his years of experiences in the supply chain IT space. But because Sanjay is looking to retire on more consistent income in the next 2-3 years and still has a few decades of life ahead of him, it's so important for him to look at opportunities that, along with other income sources he has, can provide a comfortable cushion to his retirement expenses. He may also want to look at investments that continue to build his nest egg as part of the legacy that he and his wife can eventually pass on to his kids. Some of the things that he may be looking for in his investments could include, number 1, great cash flow of the investments, either now or in the next 2-3 years, to supplement his income. If you don't understand what cash flow is, think of it as a dividend on your stocks. Or this can be a debt-based investment that pays him interest, which can serve as an income source for his retirement. And the second important thing that he'll be looking for is likely the downside protection. The downside protection should be really strong, mostly because he no longer intends to work again and continue to have that active income source from his job. And also because a lot of the passive investments, the majority of the returns on those come in either cash flow or appreciation. Appreciation is usually realized when we sell or refinance, and along with that, we also really like the tax benefits as part of the returns as well. It is important to understand how likely it is for him to be able to get the projected returns, whether it's cash flow or appreciation, especially because we need to also do some specific due diligence around that space. But that will be another episode. I hope you get a high-level idea that Sanjay will want to make sure he feels very good about the sponsor team, the market, and the specific projected returns that he's going to put his $50,000 or $100,000 in. Because that is part of the returns he will depend on to pay his bills and plan those trips that he wanted to make for his retirement. So we talked about the cash flow and the downside protection, and the third thing for this type of investor is more of a preference I wanted to kind of bring awareness to. It's about how frequent do you like to get distributions? For most of the investments out there, there's a lot of them are quarterly distributions, and I know a lot of people like to budget monthly. While monthly budgeting is a little bit more ideal, it's not a deal breaker if it's quarterly. You just need to get used to planning your finances around it and know about it ahead of time.
This podcast is sponsored by Life Mission Capital, founded by me, Micy Liu, where my life mission is to help busy professionals invest well so they can focus on what matters. All my life, I was taught to study and work hard for my freedom. Until one day, I realized that unless I let my money work hard for me, I will always be trading my most precious resource, time, for freedom. Since then, we have also been helping our investors passively diversify into more than 1,000 units of recession and inflation-resistant alternative investments, such as multifamily, mobile home parks, short-term rentals, and more. Learn more with our free ebooks at lifemissioncapital.com.
The second type of investor I usually speak to are people or couples who have worked for 8 to 10 years of their life. They're either executive or professional or business owner, and they may have kids at home. And for the purpose of this example, let's call them Sarah and Patrick. Both of them are working professionals and enjoy their jobs. One of them, let's say Sarah or Patrick, perhaps they want to stay at home because they want to spend more time with their kids before they grow up so fast. And it is also more of a temporary decision because both of them love their career. Luckily for Sarah and Patrick, they can live well off just off their one income source. But they're a little bit worried about getting behind on their early retirement goals. Yes, they want to retire early and being work optional when their kids are grown well out of the house. They're looking to retire early, making work optional, maybe in the next 5 to 10 years, instead of working until 65 where their legs don't work anymore and it just doesn't sound attractive to them. So for them, what they're looking for likely is investments that can help them diversify across the volatile stock market. They will want to diversify both with their cash on hand and also their retirement funds that may be in their rollover IRA accounts. Yes, you can diversify into physical assets using your retirement funds. We will have an episode on this soon as well, but know that it is possible. And the second thing they're looking for is a good portion of their investment portfolio will likely be opportunities that have a great upside potential, while having a good downside protection plan as well. Cash flow is not as important to them because they have good stable jobs that pays way more than their typical expenses. For example, maybe an opportunity that has a heavy value add on an apartment complex. It takes a while to get the opportunity to cash flow because it takes a while to implement the business plan, such as renovating the unit, increasing the rent to market, optimize the operations. While the cash flow may be low, but it can be very rewarding when the opportunities and the properties get sold because so much appreciation has been forced onto the property through the value add business plan. While the upside is higher, the appreciation is not as predictable as the cash flows. As you know, rents are due every month, and the expenses usually are a lot more fixed, so cash flows are a lot more fixed as well. But appreciation in terms of when you sell, depending on the time of the market, there could be a lot more variabilities in place, and we'll talk more about how to address the risks around that in the next episode in the future as well. But focusing back on this topic here, I bring this up to help you understand that it's important to understand the risks around those returns. Even though, you're not looking for cash flows, this type of investor is not looking for cash flows, it's important to understand what are the risks of having so much of the returns depending on when we exit, when we sell, when we refinance. Whether it is Sanjay who's looking to retire soon or Sarah and Patrick who are looking to build their nest egg faster, it's important to turn your eyes beyond the projected returns on the investment summary that the sponsor is showing you. Like I mentioned earlier, after all, yeah, the $2 billion lottery prize sounds appealing, but again, what's the likelihood of the number coming true, right? So now coming back to the third type of investor that I have seen is someone kind of in between the first two types of investor that we talked about, the cash flow investor and the nest egg building investor. And the third type may be looking for something in between and that has both cash flow and equity growth. And also they may be looking specifically for tax benefits. Yes, tax benefits. That is one of the major reasons people invest in physical assets like commercial real estate and real estate in general. Obviously, I'm not a CPA, but I'm speaking from stories of my personal investments and others like me. One of the common ways of realizing such tax benefits is through real estate depreciations. Many of the investors I know are paying zero to little taxes legally through this benefit. Depending on how your tax bracket is and what state you live in, it can be easily 30% plus of your income. And as a physical asset, how does the depreciation work? So the value of the building purchased depreciates over time based on the IRS accounting code. But as a simple example, if you had an income of $10,000 from an investment and the depreciation is $10,000, it'll look like you made $0 on this investment from a tax standpoint, even though you did claim $10,000 income to your pocket. This benefit can also be enlarged by an approach called accelerated depreciations, which is commonly done in commercial real estate syndications that we and other investors usually invest in. Without going to the unnecessary details, it basically makes the depreciation amount even larger in the first few years because it's accelerated depreciation. If you're a real estate professional, usually someone who already owns and manages their own rental properties, real estate agent, property managers, and etc., you may be a real estate professional for tax purposes and may be able to take advantage of the tax benefits in investing in real estate even more. Obviously, tax is complex, and I highly recommend you speaking to your CPA or accountant about it, as this is not tax advice. So hopefully that helps. As always, I believe starting the conversation inward on the life you want to have with the help of the investment is a crucial first step. That will help you understand which type of investments you would want to have into your portfolio mix. And then everything else, like investing instruments, vehicles, tactics, is just a tool and a path at the end of the day. So hopefully you enjoyed it. Until next time, let your dream go wild.
Thank you again so much for tuning into the American Dream Builder and Investor podcast with me, Micy Liu. We hope you enjoy the tips and tricks that others have used to build their American dream and their trinity of freedom. We would love for you to subscribe and leave a rating and a review. You can also find all the podcast episodes and details on lifemissioncapital.com. Until then, let your life mission go wild.